everybody, I want to do a quick market overview today, and this is going to be a very short one today, but I want to talk about some of the trades that we're in and how we're going to work on managing these trades. First trade that we're in, we just actually went short the USDCAD at 0.9990, and let's look at some of the different charts. Now on the daily chart, we have been on a slow uptrend, but here's what I'm looking at. You're going to see that price broke this long-term trend down, kind of trended that way, and then trended down even deeper, and it's been going basically on an uptrend ever since. And how we tell an uptrend, we have higher lows and higher highs. Boom, 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 boom. Okay, so it is moving up higher. We did put a sell position here and a buy position down here right above 0.9990, depending on, because here's what we don't know. Price has a tendency in that range to move into a sideways channel between 9900 and a little over the 1 mark, like 120-ish. And so what I was looking at, and so you can see it was way back here as well. And so what I'm looking at here is right now is that potentially price will move into a range. Now, because of that, we don't know if this is range bound at this point, if it's going to stay in a range for a while and bounce around, or if this pair is going to continue to skyrocket up. So here we got to be very careful on this trade. I would be more interested in buying at 9900 than I would been selling. Now we are short this pair, and we do have a bullish candle still pushing up, but we have a stop loss up in this range here at 1.0040. We've got 50 pip stop. I do expect that we'll have a bounce off of the 1.0 mark, and so that's what we're counting on is to see over the next day or so, or even tonight, a bounce off this. So here's what I want you to do. I want you to be very careful of this trade, because ultimately price could push through and break above this this resistance point. And so make sure that we're in this trade. Don't let it get away from you. If you're up a few pips, the whole idea of that trade was we're going to take some pips out, just take a few pips out of the market. Let me get this out of my way because I want to draw a fib level and just kind of see where we're at. I can get that out of my way. Okay, let's draw a Fibonacci from this high to this swing low. And you can see here that we are still below the 50% retracement level, and our stop levels are basically right about that 50% retracement. So what I want you to do is just be very careful with that trade that we are now short. And I think we're like negative 10 or 12 pips or something in that trade. It's not a big deal, but I do expect a bounce off of this level here, and at least a slight pullback. If you catch this trade and you're up a few pips, go ahead and take them. Don't sit there and wait to be stopped out or for your profit target to be completely hit. If you're up 10, 20, 30 pips, go ahead and close out the trade and take a little bit of profit. That was the whole idea of this trade. The long-term position of that trade, if we would have taken a long position down at 99.12, I think it was what we were headed at, I would have been more apt to taking the long position. So just be very careful of that trade. Let's go look at the next trade. Okay, the next trade that we're in, we set this trade, I think 4 or 5 days ago, to buy the US dollar yen that is slowly but surely working its way up. You can see on the daily chart we are trending up. We have been for quite some time. Way up, way up. We have higher highs and higher lows. Low, high, low, high, low. And now it's slowly but working its way down, but I'm looking at this as a retracement. But for the most part, this thing for the last several weeks, actually about a month, almost 2 months, has been working its way up. You can see that we got higher lows and higher lows and higher highs. It's been working its way up until once it finally broke through and is working its way up. Now we do have a retracement today. In the last couple of days, we've had a sell-off of this pair to the tune of about 120 pips, which is a good potential pullback. And so I'm still long on this pair because it is still trending up. I just did not expect this candle to be so bullish today, but we did buy at 79.50. We were waiting for a pullback. Price was moving up. We were waiting for a pullback and then the price to continue higher. And right here is where our entry point is. We put our stop down here at a 70 pip stop, and we have a 130 pip profit target on this trade. So it's the same thing on this trade, with the US dollar news being so bouncy these days, and especially with the presidential elections. Just be careful with this trade. I'm not going to allow this thing to go all the way to stop. If it would continue beyond this point here, if it gets too deep, I'm going to close early. Remember, part of taking losses is part of trading, and your goal is to minimize your losses as much as possible. And if you can take a 0.3 or 0.4% loss on a trade by cutting bait early and waiting for a re-entry, you're way better off doing that, and then making sure your profits are high. And if you do it right, you could have losses of 0.3 and 0.4%, and your gains are pushing 1.5 to 2% apiece. And overall, even if you're losing more trades than you're winning, you're coming out profitable at the end. So the number of trades that you win per month does not matter as much as your equity management and how you manage your losses and how you manage your wins. So just keep an eye on that trade. If this thing continues going deeper, in fact, let's look. We're at a daily chart. I want to break this down into an hourly chart and see how price is reacting. Now, here's what I'm seeing. Price is pushed down pretty aggressively today. This was starting today. Oops, let me kill that off. This was starting today, actually yesterday at 5 p.m. New York time is when my charts go from 5 p.m. to 5 p.m. New York. And since then, this pair has been slowly but surely working its way down where it's losing gas. But today was an extra push down, and it blew pretty much past its daily range for the day. So I'm expecting that it's going to do a little bit of a rubber band effect. In fact, we're already seeing price, and I can't really count this candle, but we're already seeing that the bottom ends of these last two are a little bit of a rejection wick, not as big as I like to see. I would have loved to see this candle close out like a real strong pin bar or something like this, or even a doji, so it's an indecision level. But what we do have forming right now is an inside candle, and since it's an hourly chart, this candle actually just started 15 minutes ago. It's going to close in about 45 minutes. I'd love to see this candle push its way back up a little ways to form an inside bar, which could be a sign of relief of this downside pressure, and we could work our way back into our range. In worst case scenario, I will close this trade at break even or even a little bit in profit if I don't feel that the upward pressure is going to blast up like we originally planned. Our goal was to close this trade up here in 80.80. So anyway, just be careful of that. And let's check out our next couple trades that we are not live in, but we have set as pending. All right, the next trade that we're in is the Aussie dollar, US dollar. Now this trade, we actually closed a pretty small trade yesterday. I expected price to explode, and I think we ended up closing out with 15 or 17 pips, something like that. It wasn't a huge run. This is for my mirror trading customers who did not send us pro signals direct. But what we're looking at here on the daily chart is that this thing has been an upward wedge and is continuing up, 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 up. Had a retracement back. In fact, if you look at the retracement level, I'm guessing that was about a 50% retracement at close. Yeah, see it? Almost a 50% pullback, a little bit past the 38. And it continued to move higher. This is still looking very solid as an uptrending pair, the Aussie dollar, US dollar. Right now, price has been going up. We had a solid base here yesterday, which I bought at. Price went up. We closed out some pips. I closed out early. I now kind of wish I would have stayed in here because it stayed solid right on this base. You can see the price has stayed above this base, tried to come down below. Let's zoom in a little closer. And it's formed a doji on the way down. Now what I'm trying to figure out is, this is what we got to be careful of. What if price could be doing a pullback down here, or are we going to continue? It's going to continue up. What I did on this trade is I had this gut feeling because of this semi-pin bar-ish style and this doji that's pretty much forming today. It's almost closed out. That I'm expecting price to do a little bit of a pullback below this line and come back up. So we close out our profit, set a re-entry at 103.80 with a 50 pip stop. So I was expecting price to come right back down in here, My stop is down in this range, which is below the trend line. So we've got to break through this. I don't mind. I think we could easily have a slight breakdown and then a pop back up. That's what I'm expecting. But to keep us safe, I put my stop loss down in this range, so it had to not only break through this level, but it'd have to break through the trend line as well to get it stopped out. So we have 50 pip stop, and then we have a 100 pip target at 104.80 that we're expecting right up in this range that we're expecting to close out at profit. Eventually, I expect price to break through this original trend line, and we'll keep on running. But for now, we'll take 100 pips out of it, and we'll be happy. So be careful with that trade. That we're not quite in it yet, but we're setting that. It's setting in our pending orders for ProSignal's direct and mirror trader customers. All right, let's look at another setup that we just sent out this morning for the Euro-AUDUSD. I love this pair. Now I want to look at the weekly chart, and I don't have a lot of things drawn out on this, but on a weekly chart, you can see that this thing is slowly, the Aussie dollar has been strengthening against the euro dollar, against the euro, sorry, for quite some time. In fact, we're talking about for a few years, actually. And the price has been working its way down, went into consolidation for a while, and it's been slowly but working its way up, swinging down, lower highs, lower lows. It's worked its way up, and about 5 weeks ago has continued to come back down. So we are on a downtrend. I expect this pair to continue going down based on where we're at in the weekly chart. I do see a level of support in here that you can tell, price has just bounced off of this level. So that's why we're seeing this thing here. I do expect it to come down. But what I do expect is that since it did hit this major, at least this was a low, a previous low, wasn't the previous low, it was a previous low, that I do expect this pair to at least take a bounce off this over the next few days. So when you go to the daily chart, what I did is drew out a few key levels that we're close to. I mean, I can draw key levels all day long. There's some up here, but we're looking at the most recent ones, and there was a key level here. You can see price really hesitated here, and really hesitated here. Resistance broke through, became support, right? Broke right through it the first time, but you could tell even way back here that this was a key level. This whole 2350 range is a pretty solid level. So price is currently down. In fact, here, by the way, let me zoom this back. Then we have another key level here, which price just recently hit and is bouncing back up. You can see this candle is working its way back up. So here's what I was expecting. I was expecting price, now that it broke through this key level, to come down and bounce off of this 2190 range, 2200, and do at least a slight level retracement. And so as we zoom in, I was looking at price to come back up, retest this original support level, which is a pretty solid support level. Retest, which is 123.46, and then to continue down, break through this 122 level, because on a weekly chart we are heading down, down, down. As you can see, it's going to go down, way back up, and I expect this thing to run all the way back down at least to this level here. And so what I'm doing is I'm taking a sell position here at 123.46. Got a 100 pip stop at 124.46, and my profit target is 116.40 range. Okay, now here's the deal. Price is not just going to shoot straight down here, even though this pair can take up some pretty serious ground pretty quick. What I do expect is that price is going to come down here, and this is my profit target number 2. And I am going to start closing profits on the way down as this thing starts barreling down. So as price gets down into this range in here, once it's up 150 pips, we'll start closing out some profits, and we'll allow this trade to just really push its way down to the 116.28 mark, and then we're going to trail it out with a trailing stop. So anyway, there it is. Actually, you know what? Let's look at one more. Let's look at one more trade. The euro pound, which I closed out 1 pip yesterday, and of course my ProSignal direct customers are still in this trade. And let's find my euro pound. Open group. Okay, I think I had euro pound already drawn out here. course, my New Zealand dollar, Aussie New Zealand dollar trade that I made 99 pips on yesterday in 1 hour. I bought down here, guys. I was already planning to buy this anyway, and then the New Zealand dollar negative news just really boosted me. You saw it in yesterday's video. I cleaned house, 2.22% return, 99 pips. I tried to close it at 100, and it recrowed me at 90.99. But when you look here, this euro pound, our customers bought, or actually we bought it at 79.80. We have a 40 pip stop. It came down to 79.63, bounced off, and it looks like it's slowly but surely working its way up. Oops, I didn't get that in there. We bought right in this range here, which it's almost at right now. And we were expecting price to come up to the 80.20 and 80.60 marks. And we have a 40 pip stop on this at 79.40, which is right down here. I'm gonna watch this closely. I need to see price really push up. I'm not really too keen on the fact that these candles last a day or so. It looks like it could be a reduction of downward pressure, and maybe we'll see a nice rally on the euro against the pound over the next day or so. And if not, I will end up closing out this trade, with a few pips, but try to keep it from moving into our stop level. So anyway, that's it for a quick analysis, guys. I just want to make sure, I'm going to try to do this more often. I get so slammed being in the market, but I know many of our customers really want to understand what's going on in my head as I'm looking at these trades. And the more knowledge I give you guys, the better, to kind of help you guys get a better understanding of how the markets work. So have a great one.